President Trump addressing the UN General Assembly later this morning amid escalating trade tensions with China. A Chinese trade negotiator even saying that America has a knife to China's neck, making it difficult to proceed. I sat down exclusively with former Treasury Secretary Hank Paulson and got his take on current trade relations between the two countries. This happened late yesterday.
And so why is someone going to want to do business with a U.S. company in the future if they believe that some administration will come along and try to break down global supply chains? And why would they put themselves in that vulnerable position? So that's the danger. But I really do believe the Trump administration's objectives are right here. China needs to open up.
More of my exclusive interview tomorrow with Hank Paulson. But first, joining me right now is the Office of Trade and Manufacturing Policy Director, Peter Navarro. Peter, good to see you.
Good morning,
Thanks
Maria.
so much for joining us.
Welcome to D.C. here.
Thanks so much. The president officiating this deal with South Korea. Let's start there. How important is this deal with South Korea, and what does it impact specifically?
Great news for the markets. Sent a really strong bullish signal. For the deal itself, means more autos, more pharma, more ag here in America that's going to go to Korea. The problem we had, Maria, is when we got into that horrible deal, as the president has said, 2012, our deficit went up from $13 billion to $23 billion. Totally unacceptable. One of the best aspects of this is we hang on to our defense of our light truck industry till 2040. That was going to go away, and it would have been just a devastating blow to Detroit. But the bigger issue here is it's a really strong signal, Maria, to Asia and to the rest of the world that this president's trade strategy is working, that we're willing to sit down and get fair, free, and reciprocal trade. And so this was a good signal.
Well, I want to talk about Asia and particularly China, obviously, but let's talk about what the president's plans are in terms of the EU and Japan. What should we expect from the European Union?
Well, the problem we have with the EU is basically two things. They have high tariffs relative to ours. I think every American would say it's ridiculous for Germany to charge us 10% tariffs when we try to sell them a car and they only get 2.5. So we got to get the tariffs down. But the EU has very high non-tariff barriers. For example, the EU harmonization standards. What does that mean? They have their own peculiar standards. So if we try to sell something into that market, it becomes very difficult or more costlier. There are delays. So we got to deal with that. And then the third thing is large-scale subsidies. So we have like the 3 zeros: zero tariffs, zero non-tariff barriers, zero subsidies. With Japan, the conundrum here is even though they have very low tariffs, they have non-tariff barriers which are large. And guess what? I mean, Americans are shocked when they hear this, but Japan sells us over 100 cars for every one that we sell them. That's not fair, and we run a $70 billion deficit with them. So we're going to sit down and we're talking with them. And that's the beauty of this strategy, Maria. Because the president has taken a very firm position, everybody's willing to talk now. Are
you more optimistic about a near-term deal with the EU, Japan, or Canada?
Yes, yes, yes. All those wheels are in motion. We have arguably the best United States trade representative we've had in the last 50 years in Bob Lighthizer. I'm amazed at how he's able to go across these different forums with the president and negotiate. The European discussions are ongoing. There'll be some discussions soon around the G20, I believe. Canada's an issue. Because we got a great deal with Mexico. Well, the essence of the deal with Mexico, as we go from a zero-sum game we were losing to a positive-sum game in which Mexico and the U.S. reclaims the supply chain for North America and turns this hemisphere into a manufacturing powerhouse. So that's the vision.
Right.
Unfortunately, so far, Canada has not joined that vision. There's a risk their supply chain might migrate south if it's just a bilat with Mexico, but this would be a good deal for all three countries, and there's just some small things that are holding up a big deal, and that's but that's ongoing.
Like what? Milk?
Well, yeah, milk's one.
Why milk? Why is that?
Well, the milk issue is something that's certainly caught the president's attention for good reason. I mean, if you go across the border into Canada, a gallon of milk costs three times what it costs here because the Canadian government showers their industry with protection. So that's not fair. But, you know, this is the kind of thing where I believe very strongly that we've got one United States trade representative. He's the guy that negotiates behind closed doors. So I'm uncomfortable when I talk about specific elements of the deal that are holding things up. I think the point is that there's small things relative to the bigger issues, and Canada, I'm not sure they're seeing the chessboard here.
But Trudeau is not moving yet. I mean, and hear me out here, because I got to get to China, but I want to ask you about this, because there's wide expectation that the House flips in November. If the House flips in November, Nancy Pelosi becomes Speaker of the House, she's not going to want to have, and the Democrats are not going to want to have any victories for this president. So if you don't get a deal with Canada done and a new NAFTA in place now, before then, are the markets underestimating the risk that a new NAFTA deal doesn't happen for a while?
No, I don't think so. I think that either way, whatever happens in November, there's going to be a vote after November for the final agreements with Mexico and Canada. And so these are structured actually in a way where they should get strong bipartisan support. These are very supportive for business, but they're also very supportive for labor. I mean, after all, everybody wins here. We get our manufacturing base back. That's good for companies making auto parts and autos, but it's also good for the workers in there getting those good wages.
It's not going to be good on tariffs for prices of consumer goods in some areas of the economy.